What is a VTB mortgage, or also known as seller financing? The vendor take-back mortgage is often underused financial option that can be helpful for the buyers that may not have enough money saved up to make a down payment, or also be utilized as OPM, also known as other people's money. It can also be helpful for sellers that are looking to encourage a purchase price without lowering their asking price, and also defer capital gains. Who doesn't want to defer their capital gains? Stay tuned, learn more about this mortgage and how it works, whether it's an option for you or not. Hey everyone, welcome back to my YouTube channel. I'm Daryl Babineau, investor-focused real estate agent here in Simcoe County, and today I'll be explaining what a VTB mortgage is, also known as vendor take-back mortgage or seller financing. If you want to know more about how I can help you buy, sell, or invest in Simcoe County, feel free to comment below. Use my contact links to get in touch with me, and we can chat real estate. Remember to subscribe, like, and smash the bell to be notified for the next videos to come out. All right, so let's dive in, guys. What's a vendor take-back mortgage? A vendor take-back mortgage, or also known as seller financing, is a type of mortgage which the property buyer gets a loan from the seller to guarantee the transaction. In that scenario, the seller also becomes the lender / the bank. And there's two types of vendor take-back mortgages. Let's start with a second position mortgage. This is where the seller lends the buyer a part of the amount needed to purchase the property. Typically, that money usually goes towards the down payment so that the buyer can get more beneficial first mortgage from the bank. But keep in mind, not all banks allow a VTB in second position. The other type is a fully funded VTB mortgage, which the seller finances the buyer with the total amount or a very large portion of the purchase of the home price in first position. Now, that can only be possible if there's a large amount of equity or the homeowner has paid off their previous mortgage and own no debt on that property. Traditional versus a vendor take-back mortgage. A conventional mortgage is regularly extended by a bank and has a fixed interest rate, sometimes variable, for the loan duration in Canada. The standard is typically 5-year mortgage amortized over 25 years. That means the loan balance has to be refinanced at the end of the 5 years. That'll be exposing the borrower to any increases in rates. Traditional mortgages are a low-risk deal for lenders since the additional equity in the property serves as a safeguard against potential losses in the case of any default on the payments. When the buyer takes out a vendor take-back mortgage in second position, they're already relying on a primary source of financing in first position, which is most likely a bank or a private investor. We won't get into that today. This makes the vendor take-back mortgages a second lien on the property. So which means is if they default on payments, the bank or private lender in first position will be first to collect what's remaining, and then your second position seller could collect on the remaining amount left over. When the buyer takes out a first possession vendor take-back where they lend the full amount or just a portion of the purchase price, this indicates that the seller is the primary lender and is in first position to reclaim the debt on default of any terms. The vendor take-back, or also known as seller financing, is much more flexible mortgage regarding the size of the loan, its duration, and also the buyer's qualifications. Whether it's a first position or a second position, the VTB can be negotiated on terms between the buyer and the seller. There's very many ways to structure these deals. And now I'm just going to go over a quick example of a second position VTB mortgage. It's going to show that it's 100% finance, which everybody would love, but it's not always the case. But yeah, so let's get started and I'll show you what it looks like. Say we have a purchase price of $1 million and you have an institution or bank loan you 65% LTV, which is loan to value on the loan. And then you have the seller who has equity in their property of roughly $350,000, which is 35% LTV. And they're willing to loan you that at a negotiated rate. Say you negotiated them down to 4% interest only payments monthly at a 5-year term. And now see, these are things that you can negotiate. You can either do a balloon payment, which we won't get into, where you have the interest not being paid until the end of the 5-year term, which we're not going to get into, like I said, but there's many ways to negotiate the seller's VTB on this. Let's say just the bank was at, their typical 6% 5-year term, amortized over 25 years. And yeah, that's a typical bank loan, fixed rate. But yeah, this is one way to just give you a quick example of what a VTB looks like in second position. These mortgages are typically advantageous for investors that are self-employed, bad or no credit, investors that are looking to use OPM, other people's money. VTB are typically used in the short term to either renovate, lift rents, stabilize the property before you can refinance it and move to a conventional loan. The advantage of the seller offering a VTB or seller financing is deferring capital gains and still making money on the property as well. If the property is paid off entirely or has lots of equity, they may be subject to significant capital gains taxes. If you decide to sell, the vendor take-back mortgage can help avoid capital gains for up to 5 years in Canada, which will give you considerable tax benefits, which we all enjoy as well. The other advantage for the seller is that he not only gets what he wants for the property, but he's still collecting interest payments, which is paying him over and above what the sale price is over a longer period of time. As always, thank you for watching. If you found this video helpful or informative, don't forget to give me a thumbs up and subscribe to like my channel for more content like this. And if you have any questions, please leave them in the comments below. Until next time, take care, guys.